Hi there, this is Team One's submission for the Optiver Hackathon Challenge. So this is our code that we run to do the trading algorithm. At the very top, we connect to the exchange as kind of shown in the Jupyter Notebook document. Then we've got a bunch of functions. This one returns the current spread of the price book that's passed to it. So if you would pass the tech basket, it would get the current lowest ask and the highest bid and return what that difference is. Then the next function will get the stock spread for the baskets and return the difference between the price of the tech basket and the combined price of the Amazon and Google stocks. Buy high buys at 0.1 above the current lowest ask price. And sell low does the inverse. It sells at 0.1 above the current highest bid price. So 0.1 below the highest current bid price. Spread trade is our main trading function. This has a liquidate mode. This just means that once we get to too far of an extreme, we're set on trying to get slightly out of that position if we can. We then look at the current position, so whether we're shorted on tech basket. If we are, we set a low limit of 0 and a high limit of 0.7. Otherwise, if we're long on tech basket, we set a low limit of minus 0.7 and a high limit of 0. If we are currently above 425 or below minus 425, then we enter our liquidation mode where we try and get cash out, become more liquid, and then that is run from line 79 to 87 in a while loop, where it calls the liquidate function. So if we then look at that liquidate function, that will it has a volume and a safety spread. The safety spread just means that we can't be caught out in the market. If someone's selling at 100,000, we won't get caught out by that. What we do is we take the different spreads of the basket, Amazon and Google. We check what they are, and then if we are currently shorted on tech basket and the spread is advantageous to us, then we buy tech basket back and we short Google and Amazon. Otherwise, if we're long on tech basket and the spread is advantageous to us, we short the tech basket and we buy back Google and Amazon. Then if we go back up to the where we first the liquidate function at line 87. So when we're buying, we have a volume of 5. Which you can see on line 89. We get the price baskets to the price books for all the different trade commodities, and then we get their spreads. If these spreads do exist, then we check what the lowest ask price is for the tech basket and the highest bid price for Amazon and Google. If that sits within our low limit and everything's below the safety spread, so we can't get caught out, then we buy a tech basket and short Amazon and Google. Otherwise, we do the inverse. And this just means that our trades, making sure our trades go through. Then we have a balance function, which basically just checks whether we have the same number of Amazon and Google as tech basket. If we don't, we run IOCs on the most updated price as long as it's within the safe range, and we buy those or short those until we have equal numbers again. Then with our market making, we first clear the orders, make sure we don't have anything, and we get the best prices of the highest bid and the lowest ask, and we overcut and undercut those slightly. And if that is feasible within a certain boundary, then we go ahead and we carry on with that. Then we have a function to get the current market price, which just gets what the most recent the most recent trade history. We get the difference to buy, which is the most accurate updated difference in if we were to buy the price difference between the tech basket and the combined Amazon and Google. Then we have a function to get the price books, and it returns the 3 of them. We have our sell market price, which just tries to instantly sell at the best market price, and the buy is the opposite of that. And then we just have a delta neutral function, which calculates the current delta of, and if we've got a limit on tech basket and those trades go through, it just ensures that Google and Amazon get either inversely shorted or bought. Hack out sells everything we have, checks our connection, and then our main function just runs through main. and is the loop that runs our algorithm. Thank you.